All right. Well, thank you everybody for joining us again on Genius Wednesday. The day today is May 20th. It's a Wednesday. There's some really interesting stuff going on. I know we're going to get into a lot of it. I'll start off by saying the most interesting thing that happened today is that a wallet that was created in 2009, one of which of the addresses was named in the case with Kleiman and Fake Toshi, as they call him, which is Craig Wright. In that court case. So 50 BTC moved out of that wallet for the first time ever this morning, and the cryptocurrency space is going crazy, making a lot of assumptions, and Bitcoin is already going down in price. So there's a lot of interesting things happening. Right now, I'm going to go ahead and pass it over to our head of market research, Mr. Steve Kwan, to dive into some of the analysis. Steve?
Yes, 1 second, and let's see. All right, well, I actually am not going to keep it short today. I have some information I've uncovered or found that would be very intriguing to people involved in markets and that follow the story of coronavirus, also known as COVID-19. Just some data points. You know, people can make their own assumptions. I'm not making any assumption, just showing you a few points that I've gathered from, I guess, reliable sources. So this is going to cover the past 2 months, really since March 16th. So let's take a look. This is from the Bureau of Labor and Statistics, a US government website. And these are unemployment insurance, or how many people are unemployed and collecting unemployment insurance. And we can see here, this is in thousands, so 2 million or 10,000, so 2 million, so on, so on. And you notice March 21st, the week, significant, you know, off the charts jump. Next week, increases again. And by March 28th, it was already moving lower. And we can see now that according to, now I realize not everyone is going to file for this every day, and some people roll off the curve, even though with the PUA, and you can take a look at this. I'd like to share this document publicly later after this presentation. So notice, just keep this in mind, March 21st. Moving on. Oh, the New York and Chicago stay-at-home orders started on March 23rd, so right after this. Now, these are the US initial and continued PUA, which is the Pandemic Unemployment Assistance Act. This is by state. And we can see the continued claims are 3.4 million, and right here, 841,000. So roughly 4.25 million people are collecting a check for the because of the pandemic or COVID-19. Now, mind you, there are 29 million people collecting unemployment insurance. So keep in mind, some of these people may have lost their job. I mean, clearly from these numbers, due to something else besides coronavirus. And since this huge jump happened before New York and Chicago had stay-at-home orders, I would make some assumptions, but I'll leave that up to the readers and listeners. Now here's a little brief timeline. This is from the WHO website. I try to find the most reputable and respected places versus saying I found something on Google or this guy says. So December 31st, first case. Keep in mind here. Now January 30th, they announced they're concerned. February 11th, they came up with the name. So let's take a look back at the unemployment data for those time periods. No, really nothing major. And well, Must not have been a concern then. Let's keep going. This was from Washington State press release. February 29th was the first death from COVID-19. And I believe right here it says, there were a couple of points I wanted to show, and 2 of the patients are from long-term care facilities. One was a health worker, and let's move on. At that point, these 3 cases brought the detected number in the US system up to 22. So February 29th, we're at 22 cases reported. I mean, keep in mind, unemployment insurance is those that actually file. So there may be people that are unemployed that don't file. Moving on, March 16th, these futures hit all-time low, or multi-month, all-time, or tradable lows. Equity indexes, crude oil, gasoline, silver, 10-year treasuries, and the US dollar index. So oddly enough, this week was the week before the massive unemployment claims increase. Now let's take a look at a few charts. Sorry, this is the NASDAQ since March 16th. This is the crude oil. So we can see the NASDAQ has risen about 33%. Crude oil, this is the July contracts. You're not going to see that negative $37 price, but it's coming close to its pre-crash price. Here we are with gasoline. As you can see, gasoline has since traded well above its low on March 16th. Here's silver. That got down to 1180. It's now 1804. Why did I pick March 16th? Because all of these assets hit their multi-year, week, month lows at 2:59 and 59 seconds Chicago time, which is 1 second before the closing bell rings for equities. But like I said, it could be coincidence, or I guess the more data points someone has, the more seriously I take it, but that's just me. Here, even the US dollar index hit a low at that point too. And surely Bitcoin is the safe haven. There's no correlation to any of these, right? Oh, let's take a look. And Bitcoin, oh wow, that's gone from 3,800 to 9,400 in that same period. So let's take a look at Bitcoin. Oh, this is Bitcoin USD. The USD, it's a USD token. It's just a 3-letter token. People can infer what they want from that. This is the dollar index. Notice these are all in US dollars. One is trading US dollars for the dollar index, trading US dollars for treasuries, trading US dollars for silver, so on and so forth. But take a look here. Equity chart. Bitcoin chart. Possible correlation? Yes. Moving on, and this will be my lead into a discussion for all the listeners, readers. So blockchain, the current primary use versus cryptocurrency. Well, first, for those that may be unfamiliar with the terms, I pulled some definitions from Wikipedia. Blockchain, a decentralized, distributed, and oftentimes public digital ledger that is used to record transactions across many computers so that any involved record cannot be altered retroactively without the alteration of all blocks. What is a cryptocurrency? A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double. Many cryptocurrencies are decentralized networks based on blockchain technology. So right there, we're saying that cryptocurrency is based on blockchain technology, or Investopedia and Wikipedia are. So let's next look at what is the primary use of blockchain today. Well, there's ways of raising capital in the US. One is equity, sell a portion of your business. Debt is borrow money because someone believes in your business. And finally, there would be asset sales. You could sell an asset that your organization owns to raise some capital. Now let's look at a few cryptocurrencies that should be widely known. Bitcoin, Litecoin, Dogecoin. Obviously, Bitcoin, the biggest, the best, the first. Limited supply, mine, no majority shareholder. How about Litecoin, an early coin as well? Limited supply, mined, no majority shareholders. When I say majority, I'm going to say 30% or greater. Dogecoin, no majority shareholders. Unlimited supply by year, but unlimited supply over decades, but finite by day. Now let's look at some examples of organization issuing tokens on a blockchain to help grow their business. Smart Contract Chainlink Ltd, SEZC, they issued the Link token. And Ripple Labs, I just chose two because these are probably two of the most widely known and two organizations that I respect and think are at the absolute top of their game and what they do and their products. And I also think that they're really pioneers for using an asset such as a token to help fund their business. And I guess my first thought, and Jeremy, sorry if I'm going a little bit over, but I think it's important that people understand the difference. Like blockchain is the technology, cryptocurrencies are something, a reward for either owning shares, having a wallet, mining them, which will lead me to our next speaker, Dustin Minch, and he can talk about mining. And if you wouldn't mind, Dustin, if you could just define how a coin or token actually comes to life via mining, so the listeners understand what I'm saying. And I will stop sharing screen.
Thanks, Steve. So let me understand the question. So are you just wanting a brief explanation of how mining works or how the tokens are distributed into the network?
Well, I guess just going from step one, you buy, somebody buys mining equipment or software or rents it. Okay, they have a piece, just like buying gold mining equipment, but it doesn't do anything sitting there. You have to have the person that knows how to implement it. Then you get in a line basically with other miners and are essentially digging for the virtual gold, correct? So
yeah, and so I always wanted to make sure I'm clear on this because I've tried to explain this in the past, and for whatever reason, I don't know if it's just I'm too technical and I kind of butcher the explanation, but this is going to be, I'm going to try and give you my most dumbed down, basic, 8th grade level version of it, because I think that's what's going to work best. And I kind of want to back it up and say that, not all cryptocurrencies are created through a process of mining. So if you look at coins like XRP, their max supply is already predetermined. Those tokens are already out in the network, right? In various wallets.
If you actually could expand on that, so I don't really hog the microphone, so to speak. Mm-hmm. I guess that's what I was trying to get at. Ripple or XRP was, that's a good example.
Right. So XRP, it's not issued through a process called mining. Its protocol does not use what they call proof of work, which is basically proof of work is a way to make pieces of data hard to generate, but easy to verify. So essentially there's different classes of mining. You can use a CPU. So some of these coins, you can mine them with a CPU. So that's, if you get a laptop or any kind of computer laying around your house, it has a CPU in it, a central processing unit. And so some of these coins like PegNet, a few others like Dero, Monero, things like that, you can mine them with your laptop. Now, Bitcoin used to be able to, when it first started, when Satoshi mined the first block of Bitcoin, that was done with CPU mining. Now, in about
But
2010,
theoretically, I think I know, like the ASIC and, you know, the mining farms are city blocks long and skyscraper. But theoretically, a person with a computer, in theory, could mine Bitcoin. I get that they're going to get one Satoshi every year or something, and they're going to lose a lot of money. But theoretically, anyone can do it, and they come to life to whoever's mining it. No one really knows, correct?
Right. So yeah, you're absolutely correct. You could you could still mine Bitcoin with the CPU, but you're probably going to you're going to earn maybe, 11 cents a year or something like that. So you'd be better off taking that hardware and mining something like Monero, because you're going to get a higher yield, and then exchanging that Monero for Bitcoin. And you would probably end up, you're still not going to make much that way. Honestly, if you had a laptop, there's other coins that I would suggest that you try to accumulate in hopes that coin goes up, 4 or 5 years down the road, like PegNet or something like that.
Well, you got the mic, man. So I just wanted to point out to people that XRP and Link were essentially assets of smart contract Chainlink, that organization, and Ripple Labs, and they released those in set amounts or something along those lines.
Yeah, it's max supply is already predetermined. It's already distributed to the network. Probably, the developers hold so much. It varies from coin to coin, but with proof of work, anytime I'm sending Bitcoin or Ethereum or any one of these mineable tokens, if I'm using that network, if I'm sending you a half a Bitcoin, Steve, right? Well, that transaction, along with all the other transactions, and you can look this up on the internet. If you type in Bitcoin unconfirmed transactions, you would see a website, which is a mempool of a bunch of transactions waiting to be verified, right? Because a miner has to pick up that transaction, verify that, I have the Bitcoin in my wallet to give to you. And then on top of that, so then, they're basically creating blocks of transactions. So these miners, they're updating the blockchain on Bitcoin. It's every 10 minutes, right? So the first thing a miner does to earn some Bitcoin is they have to verify all the transactions, and they do it in order of transaction fees, because you want to start with the transactions that have the highest fees, because that's where you're going to make the most money, verifying those transactions first.
Can I ask you a question regarding that?
Yeah.
I noticed that I use a couple products. One is Monarch Wallet, and met those guys in Las Vegas. Cool father and son, so shout out to Monarch Wallet. I also use Exodus Wallet. Don't know anybody from that organization, but shout out to them too, because my 8-year-old son downloaded it and knows how to do it. But I noticed that the Bitcoin transaction fee to send was $3.50 per something today. So I want to say sending half a Bitcoin was almost $50.
Yeah, I imagine the networks probably, I don't have a really solid answer why those transaction fees vary from time to time, but every once in a while we do have some issues with congestion on the network. And so if you want to get the transaction sent faster, you have to pay more, right?
Okay.
Because, and I imagine, part of that's probably because there's a bunch of S9s that are getting unplugged from the network right now. So everybody's trying to race to get the S17s. Obviously they want to get the S19s online, so we can continue on with, low
those
transfer
are the newer
fees.
Models of miner, correct? Okay.
Right. But, a miner, the first thing they're going to do to successfully earn Bitcoin is they're going to stuff at least 1 megabytes worth of data into a block. And that's all transactions, right? Then what they do is they have to hash a number correctly. Now, this number varies in length, and it's based off the mining difficulty. So if it's more difficult, there's going to be more zeros added to that number. And so what a miner has to do, it has to use this proof of work hashing algorithm. And the reason for that is, and it's just like the name's called, proof of work. And so let me back up for a second here. In high school,
work to get paid, right? I mean,
right.
Essentially.
So in high school, I don't know if you were ever good with math, but I used to be able to do factoring off the top of my head like that. And so
Pretty
I would
good.
just write out the answer, X equals boom. And my teacher, even though I got the right answer, would give me a bad grade because she said, you need to write out your work, right? I need to prove the work that I'm doing. So
Correct.
a miner can't just spit out the answer, because basically what a miner has to do is guess a number that's either equal to or below the target hash. And it has
So
to
like the
hash.
price is right, kind of. You got to get
Right.
closest to the value without going over.
Right,
Okay.
exactly. And so the first miner that can verify all those transactions correctly and hash that number
Gets
and
the
be the
block
first to
reward.
do it gets the block reward, right? And so it's not as easy as you think. And so a computer, a regular at-home computer, maybe it's only able to make 1,000 calculations per second. It's able to make 1,000 guesses per second. But these new ASIC miners can make trillions of guesses per second. So then it's like they're buying more lottery tickets. They're making guesses way faster than what your regular average at-home computer can do. So, and what kind of baffles me is, and what's beautiful about Bitcoin is, if I could ever meet Satoshi, I got some questions for him, because this person came from some kind of finance sector, because how did he know to make the block times 10 minutes? How did he know to make the block reward half over time? And so if you look at the ecosystem of Bitcoin, those blocks of Bitcoin back in the beginning were worth 50. Then they were worth 25. Now they're worth, they were worth 12 and a half. Now they're worth 6.25.
The first Bitcoin block was worth 50. So notionally, two and the 10th Bitcoin blocks, you would have
the
$1
first
million.
4 years, it was 50 Bitcoin. And the first year, you could mine 50 Bitcoin in about 2 or 3 days with an average computer that you're using this Zoom on right now. So, but nobody knew that the network was going to take off like that. See, those were early adopters. A lot of those people were considered weird for, following something like a digital currency like this. But there's only going to be 21. Like, I just got questions for him. How did he know 21 million was like, that's the secret sauce number? We're going to go with 21 million. We're going to block reward, or we're going to have the block rewards every 4 years. We're going to set the block times every 10 minutes. Like, this thing is almost perfectly orchestrated, which leads me to believe that whoever this Satoshi Nakamoto is, this entity group, whatever, obviously had some experience in the finance sector to be able to, really understand how inflation works to create an ecosystem of currency that kind of combats that. And so there's so many questions about, how it's structured and everything like that. But if you look at it, it's a self-sufficient ecosystem where miners are incentivized to offer their electricity and their hardware in efforts to earn rewards, right?
Yeah,
And
I mean,
so,
can I ask a question?
yeah.
I'm a commodities person. I dealt in derivatives and futures and options and things that most people don't understand. But gold, silver, copper, crude, those were some of my primary things. And it's just, in the end all be all, it's an asset that you can mine or obtain, whatever word someone wants to use. So you have to buy something, put in some effort, because it doesn't just magically start by itself. And
Right.
I'm guessing if the price is greater than your cost and your time, people do it. If it's not, they don't. Hence, if gold was $100 an ounce, people would most likely stop mining.
Well,
And
and
it's,
I'll back up right there. I'm actually, I'm okay with mining at a little bit of a loss. Now, obviously, I'm not okay with mining at a significant loss, because here's the thing. If you want to get into the cryptocurrency space, you got two options. You can go to Coinbase, sign up, pay all those exchange fees, deal with all the banking and all that other stuff. Or you could buy hardware, put your money in hardware, and get your return on investment out of that. Now, there's a big debate between whether mining's better than trading, but I've seen a lot of people lose money trying to trade cryptocurrency. There's a lot of dumb money that gets in the market. Somebody tells them, buy this coin, buy that coin, buy this coin, and then they lose money.
You don't have to
right?
bring me into this, Dustin.
Oh, okay. Okay.
I'm just kidding.
Jeremy?
No, I'm kidding.
Well,
Hey, we've all made those mistakes in trading, so I can attest to the fact that if I really had to get into a project early and mine it versus trade, I would mine it all day long. for that
Right,
reason.
because you don't even know. Some of these are going to be on like these decentralized exchanges. Have you ever tried to use a decentralized exchange? Do you know the
Not
UX
easy.
on that is just
Yeah.
garbage? It's not for the average bear, but
So,
you know,
Dustin, one of the things I wanted to say, because you said something that's really important, and I wanted to highlight it, which is there's these miners that are incentivized around the entire world to support the network and keep it going by contributing their electricity, right? And then they have to do the calculation to where they associate their electricity cost to how much cryptocurrency they can mine in a given time to see if it's, you know, an actually efficient and cost-effective method for which they're actually mining.
right.
The interesting thing about that a lot of people don't understand is that the Bitcoin network has had 99.9% uptime, and there's no other organization or technology in the world that can hold a candle to it. Over 10 years, that fact that it has had that uptime with little to no interruptions is unheard of, and it's because it has the support of a decentralized network. So I just thought that was a really
Absolutely.
important point that a lot of people don't know.
Yeah, I mean, if you look at the whole ecosystem, I mean, the thing is just beautifully written. Like, you know, this person obviously had to have some kind of finance sector background, knowledge in the finance sector to develop all this. But
Hey, Dustin,
uh,
you got 1 minute. I want to hear your closing thought, pick, call, suggestion, advice, observation. Go. Whatever
yeah,
you
I
want to
mean,
say.
so if I mean, I always tell everybody this too. If you're looking to get into mining, I would suggest, you know, um, checking out Coin Genius. We are on Discord. We can answer a lot of your newbie questions, but just starting off small, maybe get only like 1 or 2 graphics cards, get your feet wet, get familiar with it, learn with those, and then, you know, kind of make your assessment from there. And if you decide that it, you know, you like it, it's profitable for you, or you see the long-term vision, then scale it from there. Don't, you know, don't come in there with $30,000 like some of these people. They don't have a clue as to what's going on. You know, I get phone calls all the time. Yeah, I bought 60 ASIC miners and I got 400 solar panels. I just bought 2, you know, a $500,000 investment. And I'm like, well, have you ever ran one of these? And, you know, start small, you know what I mean? Like invest small and learn with a little before you scale it and, you know, overbuild and over leverage yourself, because you never know what's going to happen.
So do a little bit of due diligence. Is that what I
Yeah.
think the consensus might be? I think that's my thought, whether you're doing futures, options, equities, Bitcoin, gold, any asset. I guess I just do some research, look at the
And,
website, ask
and I,
friends.
and I
And
will say in a bull market, I will say in a bull market, there was so many more days that I made money consistently over a lot of these trading groups when, you know, Bitcoin goes up and the altcoins get wrecked. A lot of us miners are still mining into profit. So like, you know, we probably had 2 years, almost 2 years, where every single day we were making money versus like in the trading scene. I'm sure you're familiar with it, Steve. You're not going to make money consistently every single day in trading, right? You're going to lose. Sometimes your
no,
stop
I
gets
would,
triggered, things like that. There's just a lot more to learn when you're trying to
yes.
analyze the market versus, hey, let me buy some hardware, configure it, download a package on it, and be a part of these communities where all these miners are kind of networking and stuff. So it's kind of a different layer of
More like a
cryptocurrency.
business. I mean,
Yeah.
you know what your cost is, you know what your time is, you know what your electricity, your hardware,
And
you
if
know
you
what the
GPU
price is,
mine,
so you can make an educated determination versus. So saying somebody told me on YouTube to buy $100,000 worth of ASICs is probably not the best. Is that
no, I mean, unless you got like a warehouse and the infrastructure and you've done it before, like I would not start that big to begin
I
with.
would
I would,
guess most didn't. And
yeah.
on that note, I will.
Hey, Steve, one more question.
Yes, yes.
So one more question for you, Dustin. Would you say that this is a really good time? Because like collectively, I would say that most of us on this call agree that the bull market is not here, obviously yet, but a bull market is forthcoming. If you look at the last 2 halvings, I think they're extending a little bit in terms of getting to all-time high. From the last halving, it took 528 days as an example for Bitcoin to get to the all-time high post-halving. So bull markets take time, but they're coming. So would you suggest that this would probably be a really good time to set up and to be able to dive in in preparation for a bull market. Because as you said, once you're in a bull market, it seems like there's a tremendous amount of profitability and profitable days as a miner.
Right. And so the issue with that is when the profitability does kick in, like significantly, these ASIC miners that are being sold for $2,600 on Bitmain right now, resellers will buy them at $2,600, and then they'll be on their website for $4,000 or $5,000. So then the hardware costs go up significantly. And so it's, you know, it's crazy to watch this mining hardware market because it fluctuates with the market. So price of Bitcoin goes up, mining's profitable, the price of the hardware goes up. Bitcoin and vice versa for when the market flips the other way. So this is the time to, you know, if you got a sizable investment that you're looking to enter into the market, I would say, you know, consider looking at getting at least some of the hardware now versus waiting for that, you know, that profitability to kick in, that we all know and love in the mining space. So, yeah.
And you can catch Dustin in the Coin Genius Discord, and I will open up the floor to, how about Justin, Tom, Tim, or Carl? Thoughts?
Well, I mean,
comments?
I'm thinking here there are some basic tenets, and they fit into the mining, and they fit into various cryptos, and it fits into investing in stocks as well, or commodities that you're in, Steve. And the first thing is that it has to have meaning to you, and what that means is that you have to understand it. So that asset, whether it's a mining tool, and the way in which it works and how much money you're going to put into it, you have to understand what that is. You have to understand what the power of that piece of technology is going to be and how much that's worth to you. You have to take into account the electrical costs, the hash rates, etc. Unless you have an understanding of those things, then you shouldn't be entering into it. So it's to do your own research, but it's understanding that from an investment standpoint. The same thing applies to buying stock. The first thing you need to do when you're looking at a stock is, if you can't understand the company you're looking at, you shouldn't be investing in it. And it's very similar in a way to the cryptocurrency that you're looking to mine and or buy and or trade. You need to have some understanding of what that cryptocurrency is before you even start. Otherwise, you're running blind. The second thing is, you should have some idea as to whether or not there's a moat. So the moat is that thing that says to you that it has survivability versus competition. There's some unique type of thing about it that's going to prevent it from being overtaken or just completely disappearing because another technology or something better that is similar to it comes out. So you want to look at a cryptocurrency and say, does it have a moat? Does it have something unique that's usable, that makes it different, that's going to give it sustainability? The third thing that you have to look at, and this applies to stocks and equities, traditional equities, but also to cryptocurrencies, is the management team. If you're looking at a stock, you want to make sure that you're looking at a management team that aren't a bunch of guys who are just trying to rape and pillage the company, get as much out of it, and then walk away from it. And the same thing applies to a management team in a cryptocurrency space, where you want to see that the management team has a history of doing good work, whether it's in that particular cryptocurrency or in previous cryptocurrencies that they've been involved in. And then you want to take a look finally at where it is now, where it has been in the past, and there's limited history to go by here because it's only been 10 or so years. But then maybe extrapolate where you think it has the potential to go based on what it has done in the past. Now, if you can put those four things together and you're looking at a crypto asset, or like I said, another type of asset, then you have a good educated way of looking at whether or not you want to be in that project, whether you're buying it, whether you're mining it, or whether you're trading it. And I think if you can follow those four tenets of evaluation, you're going to be much better off in the long run when you're looking at those assets.
Thank you, Tim. And now I'm going to play the devil's advocate and ask a question. And if Tom, Justin, or Carl has it. So in cryptocurrency, though, I would say Bitcoin, I don't know who the team is, and I don't really know in Litecoin or Dogecoin, but those seem okay too. Whereas I do know the team in Ripple that's issuing the token, they're really good. And I know the team at Chainlink, or someone can know the team, and they're amazing guys, you know. So I think kind of what you said is what I'm trying to get at, that an organization that I guess is truly a cryptocurrency, it isn't an organization. Like, is there a Bitcoin? There's no like 1-800 I lost my wallet for Bitcoin number. There's not a help desk, but I could call San Francisco and call Ripple Labs. I could call, forgot the country, but I could call or look up online and see that, oh, Smart Contract Chainlink is an organization. Their guys are on the website. I guess that's just one of the points that I would really just emphasize to all people, that, you know, buying one of those, you're buying a token that, and you know who the issuer is. You can see their name and face, and it's a token on a blockchain, and it can be extremely valuable. I mean, you can see Ripple's $10 billion. Chainlink, as people have found out, has gone from a $100,000 valuation to billions. And I guess that's why I'm glad that Tim and Dustin kind of gave different viewpoints, where one is mining, one is doing research, but, you know, on the people. So Justin looks like he has a comment.
Yeah, you raise an interesting point. I would say that investing in Ripple and investing in Bitcoin are completely different plays. Like, Ripple's almost like an establishment play. They have potential partnerships with major banks. A lot of people are always theorizing that this might be something that big banks will use on their back end. Exchanges in the cryptocurrency space are using already things like Ripple as well as Stellar in order to make transfers on the back end, because it's cheaper than using Bitcoin. When purchasing Bitcoin or investing in Bitcoin or speculating upon it, I think you're really speculating on that it is the first mover in the cryptocurrency space. You're speculating also on some of the economics that Dustin was talking about earlier. This deflationary feature in Bitcoin stems from what many people presume is Satoshi Nakamoto's Austrian background. And Austrian economics is a school of economics that sort of is often posited as opposed to Keynesian economics, perhaps sound money, balanced budgets, things along those lines. A lot of these 21 million Bitcoins, furthermore, are going to be lost. Bitcoin's established in the popular culture mind. There's been movies made about Bitcoin. Everyone knows what Bitcoin is. Not everyone knows what Ripple is. Not everyone knows what Ethereum is. I would say that when you know who the team is as well, especially in these public blockchain projects, that is perhaps a negative in some ways. Like, these are actually central points of failures. Vitalik Buterin is a central point of failure. Charles Hoskinson, he's a central point of failure. These are people who could be compromised. They're also people around whom cult of personalities can be developed. Some of the negatives when it comes to Bitcoin, in my personal opinion, and a lot of Bitcoiners push back against this, is that a lot of the mining apparatus is based in China, and China is run by a communist party. And oftentimes communists, one of their main goals is to control the means of production. And so what if a large percentage of mines were nationalized in the Bitcoin network? What effect would that have on this network as a whole? I don't think that question's been answered. I don't think it would necessarily be the end of Bitcoin, but it definitely would have some sort of an effect on Bitcoin. When it comes to the halving and the effect on price, I think we're sort of in an extraordinary time right now. There's never been a halving that's taken place with sort of the economic background that we're looking at. We've got stimulus and quantitative easing being conducted across the globe. Central banks, not only in the United States, where quantitative easing had only been tried until now, is taking place. The EU could issue as much as $2 trillion euros. They're looking at a potential 9% drop in their GDP. The Great Lockdown, as the IMF terms the response to the coronavirus, is an experiment that's never been conducted before. So what the fallout is of that is unclear. I think that while the official unemployment rate in the United States is 14.7%, I think that is probably closer to about 30%. And the gold and silver side of things, silver is still tough to get a hold of because the mints have been shut down to stymie the spread. And right now I can only get silver eagles from wholesalers at $5.75 over spot. I've been able to get those in the past as low as $2.10 over spot. And while that supply is sort of easing and it's easier to get some of this stuff, the premiums remain low. In the meantime, silver looks real strong on the charts. I think that if there's a dump in the stock market, that will bring gold and silver down. But in some ways, silver and gold the last week have looked like a surer bet than Bitcoin has. And I mean, we've got shortage in supply on the silver side. We've got meat issues that are still kind of in the background. I believe the federal government's working to alleviate that. And what do like some of the bureaucrats know? I mean, in the EU, they've just permitted member states to legalize the eating of insects as food. So what do they anticipate further meat shortages if there is a second wave or a third wave, as Oz has suggested there is going to be? What are the economic effects of that? And will we have further protein shortages? Is that why in the EU they're legalizing insects as food? Consumer and corporate debt remains very high, and a quarter of working Americans have sought unemployment. I think there's about 140 million workers in the United States, and U.S. grocery prices have increased the most since 1974. So that kind of brings me back to the Bitcoin in particular as a deflationary currency, a large percentage of which, or some percentage of which, will ultimately be lost. I was reading a story about a gentleman who in 2009 had purchased a bunch of Bitcoins, and he lost, like at this point, it's like $60 million worth of Bitcoins. He went to a landfill to try to dig up his old computer. That's just one story of so many. And Bitcoin is the only asset on the planet that truly has a finite amount. And I think that's the play you're making really when it comes to Bitcoin. I have a lot of, I've been in Bitcoin since 2012. I am, I guess, a Bitcoiner, but I have a lot.
Can I ask you a question, Joe?
I have a lot of questions
How about
about
something
it.
like Litecoin? What's your thought on something like that, where it's finite too? I mean, it's big, but not as big, right?
So I think that Litecoin was the only thing that was around when I got into the space. And there you have also this kind of central point of failure, Charlie Lee, who was a former Google engineer. He worked at Coinbase. But I think that like allocating, depending on how much money one has, money into a portfolio of crypto assets is a smart play at a time in which, even if you're making money in the stock market, there's $6 trillion in stimulus that have been printed so far, and perhaps 9 trillion. So like that underlying dollar is being devalued. And this time, whereas in 2008 and 09, it was not given to the people in the form of these stimulus checks. So it was just given to the big banks. And so how much more is that money going to turn today than it did in 2008 and 2009? And what effect will that have on the inflation rate has yet to be seen. So I think that like allocating into a diverse portfolio of crypto assets and gold and silver is actually the only place to go. I will say though, that if you have some knowledge about stocks, et cetera, that we're going to possibly see another bull run like we did from the 2008 to 2020 period, or rather it's more like 2011, 2012 to the 2020 period. I would call that more of a pump and dump than a bull run, but yet there will be money to be made in those stocks. And I would look at some of the major conglomerations on the planet, the same companies that generally win historically, like Microsoft is making a lot of moves these days. There's the work from home apps, which I think are going to benefit from increased users. But like we use Slack at CoinGenius, for instance, but Microsoft has a competitor product now. So do you want to put your money with an upstart or a startup, or do you want to put your money with sort of a tenured player, if you will, a legacy institution? But coming back to Litecoin, it is, I think, the similar story to Bitcoin. It doesn't have that cultural awareness though, like Bitcoin does. And you can buy a fraction of a Bitcoin. But I mean, there's been movies about Bitcoin, like Dope comes to mind. This was like made by Pharrell. This came out in like 2015. They're rapping about Bitcoin. People know what Bitcoin is, but people don't know what Litecoin is. I think a portfolio of crypto assets, like really with Bitcoin at the center of it, is one of the only places to go besides gold and silver over this next period. In 2011, silver reached its peak at $50, up from like $9 at the time of the financial crash in 08, 09. In 2012, Bitcoin reached its peak then of 1920. So you're looking at 2 to 3 years from that initial crash. And I think this cycle might play out a little bit quicker than in 08, 09 to 2011, 2012. We might see the the safe haven assets increase in price quicker, particularly because of the supply issues in the silver arena. But,
Justin, I got to give Tom Barrett the mic
yep.
real quick. Sorry, we're running short on time, guys.
No, yeah.
Tom Barrett.
Nope, I have nothing to say. My knowledge of Bitcoin is vastly short of yours, so I'm in listen mode.
How about Carl Meyer we have on, ladies and gentlemen? Carl Meyer.
Dun dun dun.
No, I don't have too much to say other than just, keeping up with I think the biggest point of all of this is to educate yourself no matter what you get into, right? Whether it's main stocks, commodities, options, Bitcoin, whatever coin, it's like, and or if you're going to mine or not mine, however you're going to accumulate them, like it all has to be, we can't tell people what to do, but I think the biggest thing is to educate yourself. And I don't know how else we can hit that home. I do want to say that CoinGenius offers consulting services and other things as well for anyone that's looking to get in this space on many different levels, whether you're a business or on a personal level. We have, us here is just a small fraction of the network. We have people, so feel free to reach out. But other than that, no, that's about it. Everyone's covering some great points here. So.
Yeah, I'd like to add just one thought about stocks that people may not, but Amazon hit an all-time high after the coronavirus. And just yesterday, Home Depot, which does a lot of brick and mortar business still, has been another store that's been open through this whole ordeal. And they touched a 17-year high, which last was traded in 2003. So I guess that shows that there are definitely people still spending. And now I pass to Jeremy Bourne, the leader of CoinGenius, and see his closing thoughts.
All right. Well, thank you guys. This has been a really enlightening conversation. Obviously, a lot about the mining side. We didn't even really get into what happened today about the wallet. The potential hypothetical Satoshi wallet moving 50 Bitcoin for the first time in over 10 years. It's going to be interesting to see how that all plays out. Crypto industry is very sensitive, especially to anything regarding Satoshi, potential Satoshi, Craig Wright. So just follow that really closely. Oops. Sorry, can you hear me? There we go. So follow that really closely and see what's going on there. Our team is following it. If you'd like to join us, please reach out. Go to coingenius.ai. You can learn more about what we're doing. We're putting together one of the world's most incredible and valuable networks in the crypto space. So if you'd like to join the Genius Network, please reach out to us directly. If you're a company that's looking for consulting and trying to understand how to implement blockchain and cryptocurrency digital asset technology in your business to help you innovate, reach out to us as well on our consulting side of things. And then we also have our next Collective Intelligence Summit, where we bring together some of the brightest minds in the industry to talk about what's happening currently in this space, as well as on the macroeconomic side of things, to help you ascertain what's happening and how you can best prepare yourself moving forward. That's on June 25th and 26th. You can go to our events page and sign up, and we look forward to hopefully seeing you all there. Thanks again, and for joining us on Genius Wednesdays. Bye-bye now.